This video is intended to provide consumers with a quick overview of the main options for credit card debt relief. Let's examine the four basic strategies for dealing with problem debt: debt roll-up, credit counseling, bankruptcy, and debt settlement or debt negotiation. First, debt roll-up. Debt roll-up is a strategy where you prioritize your debts for faster repayment. In order for debt roll-up to work, you must be able to continue paying the normal existing monthly payments plus at least an extra $50 a month for each $10,000 of debt. So if you have $30,000 of debt and you're paying $750 per month already, you would have to bump that up to $900 per month in order for debt roll-up to work effectively. The way it works is that you prioritize your debts starting with the smallest balance first and apply the extra $150 in this example toward just that debt alone, with regular minimum payments maintained on all of the others. Once that first debt is paid off, you roll up to the next largest balance on the list and apply all of the available extra to that second debt. You continue this process until all the debts are paid off. By paying over and above the minimums each and every month this way, you can greatly accelerate the rate at which your debts are paid off. Instead of taking 20 years or more to eliminate your debts, you can do it in 4 or 5 years with this technique. The debt roll-up strategy is therefore an excellent approach for someone who's not exactly drowning yet financially, meaning they're keeping up with their bills, but still feeling a lot of pressure and anxiety over their debt levels. The second option is credit counseling. Credit counseling programs are also known as debt management plans, and these are usually handled by nonprofit agencies who have existing agreements with the major credit card banks. The main purpose of a debt management plan is to reduce the interest rates so that more of your payment money goes toward reducing the principal balance and less toward interest or fees. This approach is the one most often recommended by the banks themselves. And in the financial press, credit counseling is touted as the cure-all for debtors who are in over their heads. Unfortunately, this approach does not work very well. About 3 out of 4 people who enroll in these programs drop out before finishing the plan. The main problem is that the monthly payment into a debt management plan is not flexible. You still have to pay a fixed amount every month, which may not be realistic during some months where you get hit with unplanned expenses. Due to such budget fluctuations, most consumers who are struggling financially do not have the ability to stay on course with fixed program payments year after year. And this is a key reason for the high failure rate of consumer credit counseling programs. The third option is bankruptcy. Personal bankruptcy comes in 2 versions, Chapter 7 and Chapter 13. Chapter 7 is where you fully discharge the debts, meaning you pay nothing other than the fees associated with filing the case. You have to pass a means test showing that your income is below the median for your state, and otherwise your assets must fit within the allowable list of exemptions. About 70% of people filing bankruptcy do qualify for Chapter 7. And if you are eligible, there's no question that it does represent the fastest possible path to debt freedom and the lowest cost or total payout. Chapter 13, on the other hand, is a very different story. You are required to pay back a portion of the debt over a 3 to 5 year period, with the amount being determined by the court. The problem is that you have no control over the process, and the payment amount is determined using IRS schedules rather than your actual expenses. Due to the very strict nature of these plans, the failure rate for Chapter 13 bankruptcy is quite high, about 2 out of every 3 who file. Option number 4 is debt settlement. Debt settlement entails negotiating with your creditors for a reduced payoff on the principal balance. For example, say you owe $10,000 to a credit card bank. You can haggle with your creditor with the goal being an agreement where they will accept, say, $3,000 to pay off the account in full, saving yourself $7,000 in the process. Now, when people first hear about debt settlement, the automatic reaction is, why would a bank do that? Well, the short answer is that when you don't pay a credit card debt for 6 months, banking regulations require that the creditor write off the debt. This is called a charge-off. So they are already looking at a 100% loss, and therefore it generally does make sense for them to accept something rather than nothing. The risk to them is that you wind up filing bankruptcy under Chapter 7 and they would get zero. And even if you filed under Chapter 13, they would still only get a portion of the balance back over a 3 to 5 year period. So the bird in the hand is what drives the settlement process. This approach is certainly not for everyone, but for many people it does provide an excellent alternative to Chapter 13 bankruptcy. Here's how ZipDebt can help you. Once you've determined that debt settlement is a good fit for your situation, the question becomes how to go about it. Should you hire a professional debt settlement company, or should you take the do-it-yourself approach instead? There's no question that it's far better to handle your own negotiations with the creditors. Aside from the fact that you'll save a ton of money on fees, the major credit card banks do not even recognize any need for debt settlement firms to exist. So contrary to their sales pitch, there is no relationship there that's beneficial to you, only an adversarial one that translates to increased risk of legal action when using such firms. Hiring a debt settlement company can actually make things worse rather than better. You're much better off talking to your creditors yourself. But of course, you'll want some training first and professional coaching while you're going through the process. That is exactly what we do here at ZipDebt. We take the uncertainty and the guesswork out of negotiating your own settlements. We give you the playbook used by the other side, so you save as much money as possible. And our fee is a tiny fraction of what a settlement company would charge you. We've been using this approach since 2004 with great results, and our clients routinely beat the settlement averages of the professional negotiation companies. If you would like to learn more about these debt relief options, as well as our approach to assisting consumers, please read our free 32-page report, How to Eliminate Your Debts Quickly and Safely Without Filing Bankruptcy, available for instant download. If you're already thinking that the debt settlement strategy would be right for your situation and would like a detailed discussion on the pros and cons, please feel free to call us at 866-515-2360 for a consultation. The most important thing you can do is take action. Get a game plan in place for dealing with your problem debt, and it will make a huge difference in your stress levels. Just reach out to us by phone or email, and we'll help you get started. Thanks for listening.